The stock market selling off is a massive problem. It's not the problem you would think it is. No, it's not even margin debt, which is a problem. It's not even your net worth going down. It's something worse. It's the collapsing of one of the support pins of the economy that hasn't existed before the pandemic. In fact, it has everything to do, according to BCA research, with this chart here. And you might think when you hear these stats, this has nothing to do with you. Let me tell you, it has everything to do with you, regardless of your age. And if you're blind to this, you're blind to the biggest problem the Federal Reserve is facing right now. Folks, this has to do with the fact that out of every 10 Americans who are over 55 years old, 6 of them are not working. I said that right. 6 out of 10 Americans over 55 are not working. 40% retired, 20% never had a job, and 40% are working. So that means 60% are not working for one reason or another. And this is leading to what a very weird phenomenon is being referred to as American or excess American retirees. And that's a big problem for the economy and inflation and jobs. And you're going to see in just a moment. Take a look at this. In 2019, 17, and 18 and before, we had, essentially senior retirements somewhere around this baseline here. And the level of civilian labor force participation by those older than 55 or older, has collapsed after COVID. Now, there are a few reasons why we've seen this collapse. Why we've collapsed doesn't really matter so much as to the fact that it's happening, and it's uniquely American. Take a look at this. In France and Italy, you've actually got more older folks working post-pandemic. The same is true in Germany, Japan, and Canada, and almost true in the United Kingdom. This is really unique to the United States, where the United States is really negative here. Now, why could that be? It could be because of how we shut down, how quickly and briefly we shut down, how quickly we reopened, leading to potentially more seniors getting sick. This isn't to debate what COVID was about. We covered that daily then. But that's the argument that's being made here. For whatever reason, whether it's COVID and how we handled COVID or not, older folks retired. And then the problem with older folks retiring is what's keeping their wealth going right now is the stock market. Take a look at this line right here. The 2.5 million excess American retirees can afford to stay retired only as long as the stock market boom continues. Thereby, this generation is not only generating demand for labor by buying and consuming goods and services, but they're literally not contributing to the labor supply. And as a result of that, BCA makes the argument that these 2.5 million people are actually contributing to hot inflation in America. They say one of the reasons we have this de facto 3% inflation in America is not just tariffs, but it's also the fact that many of these older workers who were skilled, like top professors or surgeons or lawyers, just retired. And now these roles are being filled by people with less experience and less longer-term skill set because they just haven't been in the industry that long. Very reasonable explanation here. And it's leading to, unfortunately, a tighter labor market and tighter inflation and a more aggressive Federal Reserve. You might even hear people talking right now about how the Fed, isn't sure if they're going to cut in December. But the problem is this. A recession typically happens when the unemployment rate rises by just 1.5%. And if you take the U.S. labor force of about 175 million people and you multiply that by that 1.5% you need to trigger a recession, you literally equal 2.5 million workers, which happens to be exactly the amount of excess retirees we have. So BCA argues that if the stock market crashes, and those excess retirees have to go back to work, you will trigger a recession because of a stock market sell-off. Now that's kind of wild. And they argue there is a near perfect explanation of why inflation is settling near 3%. And it has everything to do with this shortfall of workers, leading demand to be higher, and therefore price demand to be higher, and therefore workers to be lower, because these 2.5 million people, for whatever reason in America, are not working right now, which is leading the Fed to accept this de facto 3% inflation target. And then, of course, you have to think about it this way. And I thought this was quite frankly fascinating in my opinion. Listen to this line, I'm going to read it. There are recessions that trigger market crashes. For example, the recession of the 70s, the early 70s, the early 80s, and the global financial crisis. Those were shocks that led to market crashes, basically. Something broke in the financial system, and then the stock market crashed. But then there are also market crashes that turn into recessions. The Great Depression was actually a market crash that led to recession. Well, depression in this case. The Japanese bubble burst of the 90s and the dot-com bubble, these were market crashes that led to recession. And so this is where BCA gets a little aggressive. And they go as far as saying, hey folks, we could actually have a major risk over the next year or two that the economy and the entire world economy could actually end up suffering a market crash, which ends up triggering a recession. Because when you get a market crash, when markets have never been this concentrated, and the U.S. stock market is 40% concentrated in the top 10 stocks, with the belief that all these AI gains are going to go to corporate profits, eventually that narrative is going to collapse. And when that narrative collapses in a very fragile ecosystem where we are now, when that collapses, stock valuations come down. Stock valuations come down. All of a sudden, all those excess retirees can't afford to stay retired anymore. And all of a sudden, they start showing up for whatever job they could possibly get their hands on, which then leads to a skyrocketing of the unemployment rate, a normalization of the beverage curve, and boom, you literally have a stock market fall that generates the recession. That's freaky. And excess retirees could be why America has been so strong for the last few years, and it's something not even the Federal Reserve has been paying attention to. But at least now, you are.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.